So we have an FOMC meeting tonight. This, of course, a meeting that is not with accompanying materials or a press conference with Chairman Powell. That could change in the future. There is some talk that Mr. Powell is interested in doing press conferences at every meeting, but we should be expecting a rate move tonight, though there is a very small minority looking for a 25 basis point move. But the interesting thing coming into this meeting is two or even threefold. First, we had this, of course, a very strong dollar rally coming in today, and we're hitting up against really key levels. Euro dollar around 120, which coincides with the 200-day moving average. Dollar yen around 110, and there's some other dollar pairs also at key levels. So the market really seems to be expecting a lot, even though we shouldn't really be expecting any drama from this statement, which means that the bar for surprise is rather low if the Fed does want to make some point on the hawkish or dovish side. I think the bar is quite high for them to surprise on the hawkish side, given where the dollar has gone and given where expectations for interest rates have gone. We've got the 2-year benchmark up at 2.5%, 2.50, even touching that level. The 10-year at this very critical 3+% area, which I think sort of unleashes all kinds of havoc if we're breaking significantly above there. Now, the dollar squeeze makes some sense in light of big speculative positioning that has been short the dollar almost to a record degree. So a squeeze into an FOMC event risk makes some sense. On the other side, and somewhat conflicting, if it is higher U.S. rates that are driving the dollar rally, we have a massive short on U.S. fixed income, everything from the 3-month Eurodollar futures to the 10-year benchmark, the 10-year future, Treasury note future. And if we're seeing short covering there, it's a conflicting signal on the dollar rally. So which side wins out, I think, is the key question into today. I suspect we get a fairly bland statement. No massive surprises, but the market is very sensitive here. We could be gyrating a bit, and then it's into the end of this week that U.S. jobs report for April, especially the average hourly earnings and where these interest rates are at the close of the week. That gives us a sense of whether it's time to sell the dollar now or if we're going to have to wait for another 2, 3, and even a bit more percent on the upside for this dollar squeeze. A lot of uncertainty here, and I think there could be quite a bit of volatility after this FOMC meeting and into the end of this week.